The following is a presentation of TFNN.
'Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Morning from TFNN. Welcome to the October 6th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. It's absolutely fantastic to be with you folks here this morning. Hope everyone had a fantastic weekend. Let's make sure that you and I, that we do all that we can do to have a magical week. Of course, one of the best ways that we can start off our day is to always remember that a relationship is not where you go to get something. It's a place where you go to give something. Something to think about. Write that one down, folks, and pass that along to others. Yes, a relationship is not where you go to get something, but where you go to give something. I want to thank you for giving me your time this morning. I honor you for your choices, and for the next 2 hours, I'll do all that I can do to share with you extraordinary tools for trading and investing. That includes our lightning bolt pattern, our A to B equals C. It includes our Fibonacci expansions and contractions. Of course, the combination of those two, they are what form the Gartley pattern. We'll take a look at Japanese candlesticks. We'll look at peak and trough counts. We'll look at our TAS market profiles and, of course, our Rhodes momentum trading signals, because all of those tools help us to identify the emotion of the markets, and that's really what it's all about. Now, this show here, well, it's an interactive show. That means that you can give me a call at 877-927-6648 or internationally, 727-445-1044. And then you and I, we can, along with all the other tigers and tigresses out there, we can go ahead and share our best trading ideas out there. Folks, it is Magnificent Monday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures. They're trading up about 78 points right now at 16,999. S&P futures up 9 points, trade at 1969.50. Above the 1966.50 level out there, I can tell it's nothing but bullish news out there. Below that, a little different story, perhaps. The NASDAQ futures up 16.5 points, trading out at 4,032. Russell up 4 points, trading at 11.02. Goldilocks up $4 as well. She's trading out at 11.96. Silver up 25 cents. That's up 1.5%. This morning, we'll check in on the silvery, the shiny metals out there. Light sweet crude, back 4 cents, so that is a flat out here. If we take a look at platinum, how about that? Platinum up $4 this morning. Platinum forming a hammer candle at the moment, but a lot of time left in the trading session. Quick peek across the globe out here. What are we going to find over in Europe? A little Oktoberfest celebration going on. The DAX up 106 points. The FTSE up 46. In Asia was a sea of green last night. Even the Hang Seng out there, you know, with all the troubles they're having in Hong Kong. The Nikkei up 182 points, up 1%. The Hang Seng up 1% as well, up 250. Up a 0.25% was the Shanghai. It closed out at 24.74. A quick check on, let's go check out the currency marketplace here first. Let's go check out the euro. Was last Friday's session overdone or not? I don't know. We're going to see. Big wide-ranging bar to the downside. You know, we take a look at wide-ranging bars. In fact, off of the highs out here in the euro, if you're watching us on TigerTV, thanks so much for doing that. Right now, what I'm looking at is the May 8th high. You can see off that May 8th high, we've only seen two really large thrusts to the downside. The first one was on September the 4th. As I say, markets usually don't end on wide-ranging bars to the downside. What did the euro do during that time period? Hey, look, it was in the extreme oversold territory. Just moved sideways. That's the most bearish thing that it can do. And of course, it ended up in a bearish result out here. So we had the same thing that occurred here on Friday. So today's the first potential bounce-back day, or working off a little bit of that oversold condition out here. If the euro can overtake the open of Friday's session out there. That open is at 1.26 1.2679 out here. If it can overtake that level, well, then we won't have that same pattern that persisted between September the 4th and September the 17th out there. So it's really Friday's candle that one wants to pay attention to. If we go take a look at that intraday time frame out here, and why do we want to be paying attention to the euro? We want to be paying attention to the euro for a number of different things. Number one, if we take a look at, well, I'll do that in a moment here. If we take a look at a weekly chart that's completing a 0.786 retracement, I don't think it's hit the number exactly. Doesn't need to. We use those as guidelines. Number two, because of its impact on the U.S. dollar index, and therefore, hence, the impact on commodities out there. Directional impact is really should say there's no price correlation that I've been able to establish or identify. Maybe you have found one, and if you have, give me a call at 877-927-6648. Let me know what that is. We look for A to B equals CD patterns on a intraday chart out here, or the first pullback. We really don't have anything on a 30-minute chart here that is set up at this stage. So that is what's going on inside of that currency pair. Let's go check out the Great British Pound. Let's go see what it is doing. Trade now right now at about 1.5973. This is a 30-minute chart out here. It also had the kibosh to the downside. Really no difference in patterns out here. If we look at that 30-minute time frame, let's go take a look at a daily time frame out here. You can see on that daily time frame, wide-ranging bar to the downside. Nothing at the moment that suggests that the move to the downside is over. If I go back to that euro here just for a moment, we'll put up the weekly chart for you. We'll take a look at the weekly retracement. We can do weekly, we can do monthly out here. But it's a longer-term weekly retracement that we're keeping our eye on. It's that 0.786 level. If we go from the low out here from July 23rd all the way up to this key reversal high that was put in inside of the euro, that was on the trading session of May 5th out there, you'll see the 0.786 retracement level, 1.2467. We haven't gotten down there. We're close. No cigar. We may be there. You can see on a weekly basis, extremely oversold. If we try to go back, I don't know when was the last time that the euro was really this oversold. Is there a time period that we can find out here? Come on. We can. That was a time period back in 2010. Excuse me, I had a little sip of water out there. So the euro was in that extreme oversold condition back here in 2010, and when it got down to a price point of 1.1874 out there. So we'll see if this is the area, the line of demarcation where the euro begins to, where Mario Draghi and or others begin to start taking, oops, didn't mean to do that, start taking long positions inside the euro versus short positions. My inclination is to say absolutely, darn absolutely out here. And that means that we want to be paying attention to, hey, what's going on inside gold, silver, hey, even platinum, right? Let's go take a look at platinum. Trade out at $12.32, up $5 right now. If you're watching us on Tiger TV, this has gotten the kibosh big time. But take a look at today's candle session. If price ended up right here at 1232.40, and I'm not saying it is, but that is a hammer candle, that would be the first bull or bullish sign that you would have seen. This is a weekly chart now, right? So it's a weekly chart, so a long way into it. Obviously, if I change over to the daily, we're going to see that same candle right now, so let's just go do that. Here's the daily candle out here, and if you can close somewhere between the 1232 to about the, we'll call it the 1237, probably 1238 level, right there, you'd have a hammer candle. There was a hammer candle that formed out here on September the 25th, but it was so small out here. It's not like today's hammer candle. You see that long wick, that long lower shadow to the downside. You close with a hammer candle today, and that would be sending the message. And if we take a look at platinum, if we put this on a weekly time frame out here, let's do that. Platinum, I believe, has been much weaker than gold or silver. If we take a look at the lows back here, it looks almost more like silver, right, than it does Goldilocks. Back here on June 24th, this is a weekly chart that we're taking a look at. Let's go see if there was some kind of expansion of swing points from that swing point low to the swing point high out here. Yeah, there was a 1.272 expansion that has taken place inside of platinum. It's a continuous contract that we're taking a look at if you're watching us on Tiger TV. So at this stage, we can say platinum at the moment is trying to hammer out a low out there. If we go take a look at Goldilocks, trading out at $11.98, up $5 and change. Here's the daily chart out here as we pull this back. No such hammer type. Well, that's a weekly chart, but the daily's going to look the same. If we take, let's just stay with the weekly chart for the moment. So no hammer candle out there. But what we can see here with regard to Goldilocks, really, down at its at its weekly chart here, back at the lows from June 24th, back from the remember platinum was below the June 24th level, back at the lows here from December 30th. So you've got in essence 100% move of a move out here. We'll see if in fact these levels here can hold out here. We'll see if these levels here can hold. I suspect that they're going to. And if you take a look at gold, you can see it's down towards the oversold level. But we'll just have to wait for a signal. That signal is going to come from the U.S. dollar index, in my opinion. And of course, the U.S. dollar index is not just about the euro. It's about the pound. It's about the Japanese yen. It's about the Canadian dollar. It's about the Swiss krona. And I must have left one more. I must have left one out there. Swiss krona, Swedish franc. There we go. Swiss franc, I should say. Right. In any event, so that's what's going on in gold. Let's go take a look at silver. Let's take a look at high-ho silver as we speak. Right now, you got silver trading up 25 cents, about up 1.5% out at 17.07. This chart here needs to be cleaned up. I can't even read it. Let's go clean this chart up, see what we got here as far as candles, anything else. Let me delete some of these things. There we go. Hey, how about that? Silver here trying to put in a bullish engulfing candle. Any close above Friday's open, which was $17.06 here at $17.07. That would give you a little bit of a bullish sign out here. Let's go see if we've got an A to B equals CD. Let's maybe go take a look at buying that D point out here, our A point on the daily chart for the A to B equals CD. That's going to be the high from February 24th. The B point's going to be this low on May 30th. Your C point's going to be the high that came in on July 10th. What we've got is a 1 to 1.272, just slightly below that, but a 1 to 1.272. A to B equals CD to the downside out here. It would be your second bullish sign since silver has been making its lows. Made a little hammer candle out here on September the 22nd out here. That hammer candle failed. We've seen lower price. Let me see. Is there anything back on the left-hand side of the chart? Let's put this on a weekly time frame. See if there's anything out here that might give us a clue, any kind of clue out here that we're looking for in the case of silver. And the answer to the question is no, not anything. Well, let's take a look at expansions. Let's just look at the last set of expansions out here from the low of May 26th to the high out here on the trading session weekend of July 7th. Yeah, we do. We've got a 1.618 expansion. Let me try to hold that in place out here. There we go. So we got a 1.618 expansion. Let me just move this up here. How about that? Whoops, I just grabbed it. Come on, Steve-O. Do a little bit better job for all the listeners out there than that. Boy, that was basically downright horrible. Let me see if I can do this a better way. What you're going to see if you're watching this on Tiger TV, is you're going to see almost an exact 1.618 expansion of a weekly swing point from May 26th low to the high out here on July 7th. That price projection for 1.618 expansions, that good old Leonardo da Fibonacci out there, and that was a price projection of 1675. The actual low that we have seen out here this morning was 1666. You gotta love it. This is Steve Rhodes. This is TFNN. We get back from this break. We're going to go down the street to Safety Harbor. We're going to talk about the VIX with Scott. You too can get in on the action. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and hey, thanks to everybody that was involved with our TFNN virtual trading competition. Some great trading going on, and today during the 3 o'clock hour, during the Tom O'Brien Show, the winners of that great event are going to be announced, so make sure that you tune in to see if you are one of the winners out there. Let's go down to Safety Harbor to Scott. Scott, thanks for calling. Thanks for holding. How you doing this morning?
Good. Appreciate the show every morning. I was at a resort last week down in Sarasota, and there was CNBC on in the morning, and some people were exercising down there, including myself. Got to talking to a gentleman, and he said he only trades the VIX, and I never, I hear about it and so forth, but I never really, it's not a company. I never really thought about trading it. Then I started looking into it more. I guess I got motivated. He was wearing like a $20,000 wristwatch, but so.
Yeah, but he might have bought that in Hong Kong or in New York on the street. It may have been a $20 watch, not a $20,000 watch out there.
Yeah, that's true. Although this was at the Ritz-Carlton, but anyway, I just started thinking about the VIX. So it just seems like, is it a no-brainer just to buy the VIX when everything's rosy like today? It's inevitable, isn't it, that it will go up?
Well, I don't know. I can only speak for myself. I haven't found a no-brainer yet inside of the stock market. The only no-brainer is to use stops, is to have a trading strategy, which I think you do. I think you trade Bank of America, and you've got a strategy there. In fact, you've got a strategy that you've got this thing timed by the day, as I recall. Sometimes
by the minute, really. I mean, I sit there and hold the pulse on it. But to me, Scott, that's your $20,000 watch that's sitting on your wrist. It's something that you are good at. I think trading the VIX is not going to be anything like trading the Bank of America. It's a whole different vehicle out there. So I'm not suggesting that you don't start taking a look at that, but your question of do I just buy it, hold my nose, and go from there? The answer there is no. And that would be very tough for me.
Huh? What's that?
That would be very tough for me after dealing with a stock that I'm trading at, moment by moment. Of course, that would be very difficult. But, everybody's looking for an easy way out, Steve. You know that. And it's just these things get to be a lot of work sometimes, and you're looking for something that might be a little less hands-on every single minute. Really?
Well, the only way to get a little bit less hands-on is to just change your time frame, is to utilize a system like you've in essence developed here, but just somehow be able to expand upon it. And the VIX is not going to be the VIX is going to be one of those vehicles where you're not going to have less time in front of a screen. You're going to have more time in front of a screen. So my suggestion would be you're good at trading Bank of America, and I would just invest more time trying to take a look at, if you want to free up some time, I would just take a look at some larger term trading patterns out there. That's what I would do, or just simply trade the way that you do and take the nice gifts, the nice fruit from the tree when it's presented to you. I mean, there's nothing.
Apple and Bank of America have been very, very good to me, and it's just the pulse on it. So is that your trading strategy to have a favorite, or are you just across the board with anything?
Well, I do have some favorites, and for me, it's trading the S&P futures. Mm-hmm. But being able to, because of the gifts of being able to do this show for a couple hours, and other tools that I have formed and created, it gives me the opportunity to get a wide swath of the market. Today in my newsletter service, my newsletter, there's two equities that we have a trade on. That we've got a buy order in for, and all of those based on some of the tools that we take a look at around here just because of scan. So I try to be agnostic as to the chart and just simply look for trading patterns that set up. But the VIX is a difficult one to trade, in my opinion.
Right.
All righty?
And I guess you brought up a point. I mean, the truth is, the watch could be fake, and maybe he never traded a stock in his life. You never know. So, but it
doesn't really matter what he's doing. The question is really what are you doing? And you found something that you're good
working,
at. I would stick with it.
Every rock star wants to be a baseball player, and a sports person wants to be a singer, and everybody wants to do something different.
Michael Jordan proved how bad that was. He wanted to be a baseball player and a golfer. Yeah. He's better at baseball. So I have basketball. So I'd say stick with your basketball routine, too.
Appreciate the show, Steve. Appreciate you all being there all the time. Anytime we turn it on, you're there.
Have a great day. That was Scott in the Safety Harbor. When we get back, we'll go see how this market's going to pop. Is it going to drop? I don't know, but we'll go find out. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 73 points, straight out at 17,083. S&P up 9 at 917. How about 1976? Composite up 16 points, straight at 44.91. Russell 2000 up 3 points, straight at 11.07 out there. The DAX is up 87. The FTSE's up 51 points. Goldilocks up about $4 right now. Silver up 19 cents. To the upside out here, let's see. You've got Care Fusion is buying out someone or other. They're up 23% here this morning. Dorada Therapeutics, so DRTX, that's up 72%. What are they going to be acquired by? Activists is acquiring them. Now, all these companies putting that money to work out there. Let's see, Tesla. So the first up on our list out here to the upside that is not a buyout of some sort is Tesla. It's up $5 and change. Wynn Resorts up $4 and change out here. Splunk, not splunking, up 6%, up $3. GoPro up $2.60. Baidu up a couple of bucks as well. To the downside here, Abracadabra. No, it's ADHD out there. It's Alcobra. That's down 40. Woo, what the heck is that? That is down 49%. They announced their top-line results from a Phase 3 trial. That is getting the absolute kibosh out here. I hope nobody is in this. Ticker symbol ADHD out there. Let's take a quick peek at it. Out at 706. We got to put this on a longer-term time frame. We talk about volume out of inequity. Well, that's it today. Yeah, it looks like this is it's headed all the way back to, it's already below it. So it doesn't look like anybody in this equity is having a good time. Well, maybe there could be just a few shareholders, very few. Looks like the low on this was June 24th out about the 650 level. You're trading at 7-Eleven out there right now. Not the kind of 7-Eleven you want to throw on the craps table out there. Bad 7-Eleven. Hey, if you take a look at Sunassist Pharmaceuticals, that's up. Holy cow, what the heck is going on here? They're down 70% out there. They, too, announced a pivotal Phase 3 result out here, down 70%. Holy shnikes out here. Take a look at this thing. Now, in this case, let me put this on a weekly time frame. It's been trading a little bit longer out here. Doesn't look like anybody's going to be happy about this. Closed out at $5.93 or so on Friday, trading at $1.95 right now. Man, oh man, how about that? Too bad. Let's go take a look at some other equities here that are moving. You've got Tecmira Pharmaceuticals. So talk about just being Pharma City out here, huh? Now, Tecmira Pharmaceuticals down about 11%. They are one of the companies out there that are trying to come up with some solutions for Ebola out here. But H&R Block, that's not coming up with any solution out here. HRB, of course, is not exactly. It's positive. It's bullish seasonal cycle out here. It's down about $4 and not about $1.40, down about 4.5% out here. What are they doing here? I don't see anything really significant. You've got Micron Technology, MU, off 1% this morning here. Micron is down about 3%. I got to get my eyes here fixated properly. Let's go see what's going on inside of Tesla out here. Let's take a look at some of the stocks here that are popping to the upside. Let's go put the daily chart out here and get a feel for where Tesla may be headed to, if we can. So what do we know about Tesla? Tesla here, we saw the first sign of selling that took place inside of Tesla. That was on September 15th. You had pretty decent volume there, 16 million shares to the downside. You're trading inside that swing point right now. You got a gap down from that September 15th level. That says resistance inside Tesla, TSLA, about the 274.40 mark out there. Up so far this morning with about 600,000 shares. Again, the downdraft there was 16 million shares. So it's got a little bit of repair work to do out here. On the move down, looks like it was maybe an A to B equals C to that it completed out here. Let's go check that out. Your A point was the high from September 4th. Your B point was that low on September 15th. In fact, you'd probably have to use as the C point really both those candle sessions. Well, it didn't pass that September 15th low with volume out here, so maybe we're just going to see a bit of a consolidation inside of Tesla out here. Let's take a look at also moving to the upside, Tableau Software up 7%. DATA is the ticker symbol on Tableau. This thing is up nicely this morning. It's moving into its swing point from September the 12th. That had 3 million shares. You've done 164,000 shares here today, so it is trying to take out that B point. If you see it close above 78.42 out there, that'll set up your A to B equals CD to the upside. You'll confirm it with volume if you can get above that with volume today, and that's what it's going to attempt to do out here. Looks like a hammer candle that was formed inside Tableau on October the 2nd. out here. So nice little hammer candle. 1 to 1 A to B equals CD. It would take you into about the 86.33 mark out there. DATA is the ticker symbol. Looks like that is where that equity is headed to. Wynn Resorts here up about a couple of percent this morning. Let's go take a look at Wynn Resorts. Wynn Resorts has had trouble in the past out here. It is running right into its resistance of its market profile out here. So that's what Wynn Resorts needs to do. You've also got a little gap down. So it's got several levels of resistance. We can mark them all on our chart out here. So the levels are, if we take a look at Wynn Resorts, you've got the top of its TAS market profile box out there. That's resistance. 188.13 is that number. Then right above it, you've got some tough turbulence. You've got 189.96. That's the downdraft. That's the bottom of the top of the downdraft from September the 2nd. Out there was 4.7 million shares. You've traded 217,000 shares. And then 191.89. That's the level that Wynn Resorts has to bust through to close that window, to repair that window. Otherwise, that becomes resistance. If it can get above that, then you can start taking a look at retracements. Retracements inside of Wynn Resorts. Well, your dead cat bounce, that's going to take you right in. So you got really a lot of resistance right in this 190-ish area. So getting above, if it can close above 191.89, that gives you the promise of 202.17 or so. That would be on its plate out there. Ticker symbol WYNN. Let's take a look here at, what do we want to look at out here? What else? Let's go look on the downside. Let's not take a look at these pharmas. Let's go take a look at H&R Block. HRB is the ticker symbol out here. Let's go see what it is doing. Almost creating a little island. We've not looked like it, but no island out there. No island, man. But if we do take a look at the H&R Block, it's got this little nasty. So it ran right down here into this high volume, untested low. Now, it only made it to the top of that area. It looks like that set of holders out there is trying to support this equity. That was right around the $29.88 mark out here. We saw volume of 17 million shares out there. Now, it's not a swing point. It's a high-volume low. It says that at some point in time that there could be a counter-trend rally that's going on inside of H&R Block, HRB, setting up the C point of an A to B equals CD to the downside. That could go ahead and get that test. The better trade on H&R Block would be a test of 26.92. Let it do with less than 17 million shares out there. Let's go to Peppermill, Massachusetts, to Mike. Mike, thanks for calling. Thanks for holding. How you doing this morning?
Good. How you doing, Steve?
Excellent. Thanks so much for asking. Did you have a nice weekend?
Yeah, I did. How about you?
Yeah. Now, it's getting a little cool. There was a little bit of a cool front down here. What that means to us is it, gets below 70. How about up there in your neck of the woods?
This morning I was scraping ice off my windshield.
That's cool.
I'm on the Massachusetts-Hampshire border.
Okay, well, I don't mean cool in the way of, hey, that's, really awesome, and sorry to hear about that.
Yesterday was beautiful, though.
Would that be early for you? Is that early this time of the year for you to be scraping the windshield?
Yeah, it might be a little bit, yeah. I mean, I'm up early. I was out there about 5:45, so. But, yeah, that's a little bit early for that, I think. It was 35 degrees.
Okay. So. Well, warm up our hearts. Tell me what you want to do here. You're taking a look at the IWM and TNA. So warm me up a little bit. Tell me what you're trying to do here.
Well, we spoke last week about IWM and TNA and TZA. So I bought TNA last Thursday when it came into those two swing points.
Excellent.
So I'm wondering if where you think that's going to head if you...
Well, you ask me, and I have to give you my honest opinion. My honest opinion is I think that last Thursday the market put in a significant bottom, a significant major bottom out there. So the first question that I would have for you is, in trading the TNA, what's your horizon? What's your time period that you're trying to trade out there? And that way I can couch my suggestions a little bit more clearly for you.
Not real long term. I guess 2 to 4 weeks.
4 weeks, okay.
Although,
if you bought last Thursday as price was coming into the lows out there, my suggestion is to let it ride. to keep your stop in place. You can keep, if you bought it last Thursday, you probably can put your stop to break even, and you can let this thing rise. Now, what the IWM is doing, and, it went ahead and it tried to bust out the lows. And it tried to bust out a hammer candle on the both on the daily and the weekly. On the daily chart, it was the May 15th level that held. The only thing I don't like about the IWM was it tried to bust out those swing points with too much volume. But that's only one element of the of an actual trade setup or taking a look at a chart out here. So the IWM held that hammer low, that consolidation is really, really critical. In fact, if I put the weekly chart up here for you, you'll see the same thing inside of the Russell 2000. And if we take a look at it, there was this candle session right here the week ended February 3rd, which was also a significant and important low inside of the marketplace. And so that was a weekly hammer. So on a weekly and a daily basis, the sellers in the market were not able to bust out the weakest indice of them all out here. They talk about the death cross and everything else that's out there, and it was not able to bust it out. So I would say that at this stage of the game, you're in on a trade that has the potential to run all the way back up to the consolidation highs. Inside the IWM, that's in the 120.58 mark out there. So you're in at the best possible price, it sounds like. And I would say to let this ride.
Okay, Steve. Thanks so much.
But keep a stop in place. And at this stage here, I would just go ahead and set that stop at break even and see how things play out here. Okay? Now, I don't expect it's going to be a moonshot, which means it's going to take place overnight. There can be some, because we saw some pretty extreme selling last week, so we can see some chopping around. But I think you're in a trade at a pretty good price, and that would be my suggestion to you.
All right. Thank you.
You bet. That was Mike up in Pepperville, Massachusetts, up early this morning. You got to like the early bird because they catch the best worms out there. He was scraping his windshield, something that we don't have to do down here in Florida, thank goodness. So that was taking a look at the IWM trading in this consolidation range that we have out here. Of course, Al, he says that they do have to sometimes have to scrape the windshields. I don't know, Al. In any event, so we got that nice big consolidation inside of the Russell 2000. Now, we'll also tell you, Mike, that if, in fact, this was a significant bottom that had formed out there, the Russell 2000 will likely outperform the market out there. If we were to take a look at a longer-term chart, let me see if I still have it up on my screen out here. Do I have that workspace open? Give me a moment here. We put up the monthly for the Russell 2000. I'm just switching over to a different chart here. So give me a moment to pull that up. We're going to take a look at the monthly chart. Now, look, we're a long way from the monthly chart here completing. But if we take a look at the Russell 2000, what's also interesting about last week's move down, and we saw this take place once before, and that is if we come off of the high out here, hopefully you're watching this on Tiger TV, if we come off of the high, now what the high I'm referring to, by the way, is in March of 2000. And if we take a look at that high, which, by the way, is 614.20, and use that high as a marker and then use as your next high out here the July 2007 time frame, and you just draw a little trend line there. What's interesting about price and what it did last week, just as it did the week or the month ahead, because we're looking at a monthly chart, the month of May in 2014, price came down and it tested the top of that trend line and rejected that area. So I would also say, Mike, that as long as that level holds, that you are in a pretty good shape on that trade out there. And so that is taking a look at a weekly, in this case here, the monthly chart for the Russell 2000. We looked at the daily and the weekly inside of the IWM. So we'll go see how this all is going to play out here. But as I say, the weakest of them all couldn't bust through an area that had the volume and should have been able to bust through that level. Doesn't mean that it'll hold, but just keep your stops in place. That is the only thing that we can do when we are trading out here. Let's go take a look at what's going on an intraday time frame. Let me switch over. We'll go back and take a look at some other charts out here. Give me a moment to do that. Now I got to switch back to the other tab that I actually had up, and you've got the Dow's up 86, the S&P is up 10. The key number to watch inside the S&P futures is going to be 1966.50. You stay above that, and the bulls have control of the game out here. Now they don't have truly control of the game here yet in the New York Stock Exchange. Oh, I take that back. Not so fast, as our man Lee Corso loves to say out there. And who doesn't love to hear him fast saying that out there. Of course, he would be saying not so fast in the New York Stock Exchange. We're going to switch over and take a, because right now you got 1,556 net advancing issues to the upside out there. You get more than 1,377 today, and guess who has the ball in the market out here? Yes, that's right. It'll be the New York Stock Exchange, the one that gave us the first bearish sign out here right now today, poking its head up above a very important. We'll go take a look at that when we get back to this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, Dow's up 72, S&P is up 8. It's the New York Stock Exchange you want to keep your eyes on here today, up 61 points as we speak right now. But what you want to really be paying attention to is the net advancing issues, assuming we're going to have net advancing issues out here. Right now, you got advancers leading decliners by a pace of about 3.5 or so to 1 out here. The key number to be watching, 1377 is the magic number. You're at 1405 right now. You got a lot of time left in the trading session, but anything above 1377, as you'll see as we switch over and take a look at the summation index for the New York Stock Exchange, you're going to see down below in the second panel, you'll see it's turned just slightly green out here. That's slightly green. That's not the kind of green where, you just had some bad food or a bad meal. This is the kind of green that you like to, well, it's not the kind of green you want to see if you're bearish out here from the widest swath of the market. Of course, nothing. We can't control what takes place in the next moment. But what I can tell you is, as you know, Stevie's been looking for a major bottom to form out here. So far, that is coming to fruition. We've taken a look at a number of different tools out there to suggest that. I'm not saying it's not going to be choppy out there. I'm just saying that a significant bottom has very likely formed out there. If you want me to be more definitive, a significant bottom has formed. Forget about the likely. It's formed out there. Now, the New York Stock Exchange is going to be the next thing on our list out here that gives us a indication that in fact, is true. Now, the New York Stock Exchange, you'll see the diagonal yellow lines in my screen out here going from lower left to upper right. Price is going to try to get back into the party. That's where the doors for the party is. And but right now, if you get more than 1,377 net advancing issues out there, the summation index will have turned up. The price oscillator will be above the zero line. You can see here the last time that we turned down, that happened to be up at the highs on the New York Stock Exchange. That was on September the 5th out there. So that's what's going on inside that. You want to pay attention to that. Of course, we want to pay attention, as Scott was calling about the VIX index and was considering trading that as a day trading type vehicle out here. We want to pay attention to inside the VIX to give us an additional confirmation is, can the VIX get below its 50-day exponential moving average? That's at the 1363 mark right now. You're trading at 1435. But the VIX, well off of its session highs. That was an easy call out there because the VIX had gotten so expanded just using the Bollinger Bands out here, but using just a 1 standard deviation. And when the VIX does that, it just simply, the market gets just too expanded out here, and that's in essence what took place as it was making its high a couple of trading sessions ago. Now the real key is going to be that 50-day exponential moving average. If the VIX gets below that, then you'll have an additional sign of a market that wants to break out to the upside. Back on the summation indexes out here, we take a quick peek. We don't have the Dow yet in bullish formation, but it's just a few points away from being able to do that. So you could get the Dow's price oscillator turning up. You can also, we're very close inside of the NASDAQ composite right now to doing the same thing, probably getting above the 44.95 mark is the number inside of the NASDAQ composite. You get them all in nice bullish formation out there, and you're off to the races. As far as currency pairs here, let me take a look at the Euro-Japanese yen. Let me see what that is doing, any kind of patterns out here. Really just holding steady as we speak right now. So not much movement in Goldilocks and silver here at the moment. The U.S. dollar index back about 278 ticks, trading out right around the 86.50 mark. The Dow's up 75. The S&P is up 8. The composite is up 14. And, folks, if you're off to start your day, again, thanks so much for joining us. We really do appreciate it here each and every day. And always remember, folks, that you have an amazing power within yourself. And that power is so strong, it'll cure incurable diseases. It'll build a life of abundance, folks. But most of all, to create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Monday. Look forward to seeing you soon.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.